Okay, now that we have time, we have around 4 hours left. Okay, anyway, we would be doing nothing, just sitting and doing nothing, obviously, watching YouTube and chilling. Instead of doing all that, let's do what we planned for the weekend now. And before doing that, let's just place all the orders for 1 is to 2. And then after placing all those pending orders, let's get to work. Okay. Okay, so basically, because of our sadness from losing all the money we made, we we failed to recognize this opportunity in Bitcoin. As you can see, for our order block, then you go to 1 hour order block, then we have this tab, and it just went 1 is to 2. Okay, that is the only trade we missed, and there was no other opportunity. And if you see now, we have no other opportunity. Okay. Yesterday, when I realized 1 is to 1.2 is the thing, I thought, well, let's just see, and then I placed an entry here. I didn't take this trade. I thought this wick is too big, and then I went to 15 minutes and I placed an entry somewhere here. The thing is, it went down so quickly that I thought no trade, and then I closed the entry. And if we took a trade here, we would have 1 is to 1.2 right there. Okay, anyway, and if we thought of 1 is to 2, we would have broken even, and we would have got anything or whatever. Okay, so this what we planned for yesterday is the same thing today. There's nothing new. Euro JPY looks like we have a trade, but then the thing is, it has multiple 1 hour candles, which is giving, which means it's low probability setup, and there's another imbalanced week here, so this entire thing could be swept off. Okay, but let's just observe. Okay, everything else, all the other orders have been placed. So let's take GBP JPY as our pair to test our 1 is to 1 and 1 is to 2 and 1 is to 1.5 and 1 is to 3 with 15 minutes order block, and see which one is profitable, and we will decide which is the best for us. See you in 2 hours. I think it will take that much. Okay, bye. Okay, we are back with the results. It took around 2 hours. Okay, and we did GBP JPY. Okay, it's actually a very weird pair. I'll tell you why. Because it's not a USD pair. Okay, and the problem with this is there are sudden spikes. Okay, sudden massive spikes in the chart. Okay, and there seems to be no news. But if you go to Euro USD or GBP USD or any USD pair, the spikes are like most of the spikes are due to some news. Okay, but here there are random spikes. Okay, during the news, even without the news, there are like random spikes. So I really don't know why those spikes are there. But even if those spikes, okay, these are the results. Okay, so with 1 is to 1.2, we have 93 trades, and in a month we get around 7 trades, and we total number of wins in a year is 56, and losses are 37, and there's no break even in this risk to reward strategy. Win rate is around 60%, profitability is 30R. 1 is to 1.5, we have 81 trades, 6 in a month, 44 wins. Losses are 37, no break even in this as well. Win rate is 54%, and our profitability is 29R. And 1 is to 2, we have 73 trades in a month. We have around 5 to 6 trades. Decimals are around 5.7 or something like that. And the wins were 36 and losses were 37. Okay. Break evens we had 20, because if you remove 56 minus 36, we have the rest of the wins are obviously the break even points. And win rate is around 49 to 50%, but that most of the losses were due to random spikes. Okay. GBP JPY doesn't seem to be uh, caring much about the order block. Okay, so something with that. Because when we used Euro USD as our back testing, we got around 57% win rate. Okay, so I think it's because it respects that, and this one is not being respected. I don't know what, but anyway, even if we have a 45% win rate, we would still be winning. Okay, regardless of any of the risk to rewards, we will still be winning and be profitable. So strategy is nothing wrong with the strategy. Okay. Um, but with the problem, wait, I'll put cons of this strategy is that there is no break even. Okay, same thing here. Okay, and then 1:2, a lot of break evens, and at the same time we have to manage the trade after it gets triggered. Okay, so that is one con. Okay, then if you want to see 1:3, which is the 15 minutes candle, the biggest con I noticed is that we miss a lot of trades. We're missing a lot of trades, and we will low win rate. Okay, so in my eyes, 1:2 is still the best because it has the highest rewards, not by a significant amount, but by a good amount. Okay, and when we increase our risk tolerance, so from 1%, like right now it's if it's 1%, we have 35R, and if it's 2%, then the difference is 10R, and if it's 3%, the difference is 15R. So 15R is still a decent amount of risk. I mean, decent amount of reward that we are losing on. Okay, so these are the cons. Okay, I still think 1:2 is the best. 1:3 also works, but I don't want to go back to a strategy that gives us a lower win rate. Okay, the reason we left that Asian liquidity, London liquidity strategy is because there's a very low win rate, and we keep getting stopped out. Okay, and one more thing with 15 minutes is that we get stopped out. Okay, so there's a 15 minutes order block, and you place stop loss below the 15 minutes, but then in the 1 hour, that 15 minutes order block it isn't the lowest point of the 1 hour order block, so the price just goes below the 15 minutes order block, stops us out, and then goes up. So that is also one other con. Okay, so this is what trading is. The more you increase your reward, the more number of negatives you get. Okay, and if we go to 1:4, 1:5, then another con would be is to wait for a long time to get our win. So, and when you go 1:5, 1:6, then our commissions would be so high, because 1:5, 1:6, we'll have to go to 5 minutes to get the same amount of profits, and then we'll be missing more trades. So exactly. So more reward, more negatives, and at the same time lesser win rate. Okay, so the best uh, risk to reward for this strategy is 1:2, and let's stick to that. Okay, so let me complete yesterday's video. I was too tired that I slept off. Okay, so uh, okay, so our GJ, this is the data. 1 is to 1.260%, 1 is to 1.554%, 1 is to 2 50%, 1 is to 3 38%. The best is 1 is to 2 for GJ, and the best for Euro USD is also 1 is to 2, but the best for gold is 1 is to 1.2, sorry, 1 is to 1.5. Okay, see, so what can we do is a big question. Definitely 1 is to 3 is the worst. Okay, so let's make that red. We don't want to be trading this. Okay, so let's remove this from our heads. Okay, and we cannot change risk to reward depending on the currency pair, because it's all random. Okay, it's very random, and based on the three different type of pairs. So gold is totally different. Euro USD is the most sane forex pair. GJ is the really weird forex pair, and if you just average it out, I think still the best would be 1 is to 2. Okay, so maybe we can go for one more pair which is not Euro USD, GBP JPY. So I'll be trying in Euro JPY. Okay, or maybe we could do Aussie dollar. That feels like a more sane idea. So today we will do one last pair. Okay, Aussie dollar, I think. Let me just go through something else and then see whatever happens, and then if I choose, let's just see. And after doing that, I will see the stats, data, average everything out and see which gives the best returns. Okay, and then from then we will decide, which one to continue with. Okay, you know what, just to make ourselves clear, I did one last back test with Euro Aussie dollar. Okay, because that's a non USD pair and non JPY pair. We have done USD pair, and we have done commodity, and we have done JPY pair. Now it's time for Aussie dollar Euro pair. So because we did that, okay, and we are just getting the exact same results. Okay, so for 1 is to 1.2 we got 58% win rate, 1 is to 1.3 we got 54%, and then 1 is to 1.5 we get 50%, then 1 is to 1.5 with a break even at 1 is to 1 we are getting 54%, which is 24 R. Okay, and then 1 is to 2 we are getting 28 R. So with all the proper tests, okay, the best test throughout, we are getting 1 is to 2 as the best risk to reward. Okay, this is the best risk to reward. Now in gold it's showing 1 is to 1.5, but the thing is we did not wait. So Euro Aussie dollar is the most honest, most cleanest, most purest backtest ever. Okay, because you can see the number of things we have, wins, 1 is to 2, wins 1 is to 1.5, wins 1 is to 1.3, wins 1 is to 1.2, losses. Okay, so this is losses are when the price just doesn't do anything and just goes down. Okay, that's all. And 1 is to 1.2 losses means that it tapped the 1 is to it tapped the order block, went 1 is to 1, did go to 1 is to 1.2, just went back down, and we wouldn't be breaking even in these three setups. Okay, so in these three types of risk to reward ratios, and it's the loss for each 1 is to 1.5, 1 is to 1.3, 1 is to 1.2, and we have calculated that as well. And one more thing is, when I took extreme care when placing the trades. Okay, if there is a slight if it doesn't tap us, I don't consider it. Like, let's say there is like, imagine this is the 1 hour order block, but this is 4 hour. Let's say this is the 4 hour order block. Okay, 1 hour order block. Okay, let's see if it does it. Okay, no. So example, yeah, this is a perfect example. So this is a 4 hour order block. Okay, this is what I did. So let's play from here. Okay, so our entry would be here. Okay, here, and our stop loss could be here or here. Okay, let's just say it's here, and then it came and then it went back up. Okay, I did not move the order to here and put stop loss here. I did not move anything, and I considered it. And one more thing is, I did not take this trade because it tapped this candle and it gave us a 2 candle push. So that means this order block is exhausted, and I did not count this trade as a win. As you can see, there is no win loss. Everywhere I put a win loss, there is a trade. Okay, there is no trade here. So I was that careful, and with that very careful results, we have with such careful backtest, we have this result. Okay, and I think the best risk to reward, the camera turned off. Anyway, the best risk to reward is either 1 is to 2 with a break even, or 1 is to 1.5 with break even. Okay, and if you see the gap between 1 is to 1.2 and 1 is to 2, it's a 40% increase in profits. So that's a really big amount. Okay, so we either have to choose 1 is to 1.5 with break even, or 1 is to 2 with break even, not 1 is to 1.5 without break even, or 1 is to 1.2 or 1 is to 1.3, none of them. So the competition is between these two, and now I have to contemplate. 1 is to 1.5, we have a slightly higher win rate, but we have a lower reward. Okay, what I don't understand is the effort we have to put for both is the same. 1 is to 1.2, it's the same. 1 is to 1.5, it's the same. So if we are putting the same amount of effort here and the same amount of effort here, and we're going to get more rewards, then obviously it's best to continue with 1 is to 2 itself. Okay, maybe in the short term we will be mostly break even here and then. Okay, but I feel it's the best risk to reward ratio. Okay, and if you see GBP USD, it's coming almost the same, and given the fact that we did not remove 1 is to 1.2 losses or 1 is to 1.5 losses, this is this much. So if we add some losses, I think the ratio is going to go down. This is the most cleanest, purest backtest ever. So let's just make this put another border, so that ever backtest, cleanest backtest ever. So we're going to go back to 1 is to 2 And I don't know why I'm looking at the camera is turned off. So 1:2 is the way to go. The only problem is that in gold, most of the time the candle reverses after 1:1.5, as you can see. But we have to go with 1:2. Okay. Even the average, it's showing that 1:2 is better. Even the projections are showing that 1:2 is better. And if you see all currency pairs together, it shows 1:2 is better. And in every way, it shows 1:2 is better than everything else. Okay, only in this Aussie dollar we have this weird returns. But obviously the data has not been fully back tested, so only 7 months, so we cannot refer to this, we cannot consider this our thing. So yes, see you on Monday. Okay, as I'm copying all the videos, I just realized that I did not disclose the fact that we did not care about low probability setups, we did not care about basically we did not care about anything at all. Okay, we just took every single trade without seeing if there are 2 1 hour order blocks, or if there are multiple 4-hour candles, or if there is a breakup structure. None of that. Okay, we just took a trade at every possible place except those news event trades. Okay, Euro Aussie dollar comparatively has much lesser news. That's why we have more setups compared to Euro USD. If you see Euro USD, we have only like 54 trades in 12 months, while Euro Aussie dollar has 74 trades in 11 months. So obviously today this video is going to be very long, like around 35-40 minutes. So please bear with it if you're watching this. Okay, maybe this is going to be a good strategy for someone who's watching, and you could become rich. Okay, bye.